Hi dear friends, today is September 17. As usual, we discuss the charts of the most popular currency pairs and make up trading plans. Both the euro and the pound sterling are gaining ground against the greenback. On the one hand, the euro found support from positive business sentiment data from the eurozone. The British pound neglected mixed data on the UK labour market. Unemployment claims were higher than expected. The jobless rate remained flat. So the sterling carried on with its uptrend. The highlight of the day is certainly the Federal Reserve's meeting. The fact of the rate cut has already been priced in. Hence, we will hardly see extraordinary market moves after the meeting. I remind you that Fed policymakers brought up the issue of monetary easing since mid-August in the wake of downbeat non-farm payrolls. Since that time, traders have been pricing in a rate cut in September. Thus, they have been buying the euro and the sterling. Earlier this week, the market saw the peak of buying. If the FOMC just lowers the funds rate as expected without hints about further rate cuts, the US dollar might perk up against the euro, the pound, and other risky assets. For these, the central bank should downgrade economic and employment forecast. This fact indicates that the Federal Reserve will go ahead with active rate cuts. At least 2 rate cuts could be announced until the year end. In this case, the euro and the British pound will follow the bullish trend. No economic data will be released in the US. Traders will get to know inflation data for the UK and the Eurozone in the first half of the day. The UK CPI is projected to grow by 0.3% from a month ago. The annual CPI is expected at 3.9%. Amid the fledgling economy, the Bank of England will have to put interest rates on hold to push inflation down. In the Eurozone, the CPI could have risen to 2.1% on year in August. The core CPI could be at 2.3%. These figures roughly match the ECB's targets. Now let's move on to technical analysis. Support for the euro-dollar pair is 1.1837. A dip and a false breakout are the reasons to open long positions aiming to reach 1876. If broken and the price settles above, the instrument could rise to 1903, 1937 and even 1.1984 in case of the dovish third. Short positions in the bull market will make sense after Powell's soft remarks. If there's a false breakout at 1876, we could go short with the target at 1837. If the bulls are not active here, we could sell during a correction with lower targets at 1793 and 1754. We could plan long positions during a dip. Entry points are 1754 and 1793, depending on Powell's rhetoric. Meanwhile, the British pound has updated its highs during a steady uptrend. False breakouts at 36.26 and 35.90 are normal levels for adding more long positions. If these levels are broken and the pound-dollar pair settles above 36.37, we could go long with targets at 37.07, 37.46 and even 37.85. Then I will consider short positions bearing in mind a drop of 25-30 pips. I will open short positions at 36.67 or 37.07, predicting a sharp fall to 36.25. Once broken, we could aim for 35.90, 35.55 and 35.25. I assume high volatility in this area and the entrance of the buyers. So I will open buy positions at 35.25 during a dip or 35.55 depending on macroeconomic data and the Fed's decisions. Good luck.